Welcome to the show, everybody. Thank you for tuning in. Glad to have you guys here. Today is January 10th, 2020. And, there's a lot of stuff happening in the world right now. Let's get started. Let's open up the charts right here and let's take a look in the news. You know, what we're seeing Boris Johnson is finally got a parliament that he can work with, and he's got his new deal through Parliament for the Brexit. So evidently, they're going to put this thing through the House of Lords after the MP vote. So it goes through the House of Lords, and the next step is, I guess, it becomes law. And so the United Kingdom is probably going to leave the European Union very soon. Now, in other news, the central banks are not out of ammo. They're talking about a new policy where they have dual rates. In other words, how this would work is on loans they would have negative interest rates, and on savings accounts and stuff at your bank they'll have positive interest rates. And so they'll separate and they'll have different rates for different things, different aspects of the economy. The central banks are never going to run out of tools, guys. They're going to keep up monetary theory or modern monetary theory. They're going to keep basically printing money, but nowadays they don't actually print it. They just push a button on a computer and generate it from nothing. They're going to keep up with this. They're going to keep pushing out the money, and they're not going to let the system fall. So yeah, we can see Dow 30,000. It wouldn't surprise me if they keep on pumping the money out there, because the Dow is only moving on the amount of money that the central banks are pumping out. It's an artificial market at this point in time. Let's take a look now at gold prices. And what we're seeing a gold price of $1,553. Now, it's very important that gold is staying above that $1,550 mark. So that's what we're seeing with gold. Now let's take a look at silver. Silver today is $17.98, and it's moving up right now. It's up 12 cents on the day. It's getting up around $18 again. We're seeing strength in gold and silver, even though the geopolitical tensions have kind of settled back down again. I don't think Iran or the United States wants to actually go to war. First off, Iran would have targeted entirely different if that's what they wanted. In the United States, if they would have seized the opportunity during that 2 or 3 hour period when they were being attacked to attack back, if they really wanted war. So I'm assuming that both sides don't want war, and things have settled down now a little bit. And man, it's looking good for the markets. Let's take a look at the Dow Jones today and see what's happening. We're up 45 points on the day so far at 29,002. The Dow's moving constantly into new record highs. Let me get the 5-day chart here, and we can just see it trudging up higher and higher and higher. 29,002 right now. So this is an unrelenting march upwards for the Dow Jones. It's in nosebleed territory. If the central banks try to pull back and pull the stimulus away at all at this point, this market will fall. It's got a long way to fall. Let's take a look now at crude oil. Crude oil prices are dropping today, but not substantially. $59.33 for crude oil. We're looking at a 48 cents. Actually, it's $59.05 right now. We're looking at a 47-cent drop, or 0.79%. There's an awful lot of crude oil out there in crude oil inventories. That's because the United States now is a major producer of crude oil. But it's not something that's going to last, because these wells that they're pumping from in the United States are oil fracking, is not really sustainable in the long term. Okay, let's take a look at U.S. Treasuries today. See what's happening. We're looking at falling Treasury yields. We're looking at nothing big, But we're looking at 2.3 on the U.S. 30-year, 1.84 on the U.S. 10-year, 1.75 on the U.S. 7-year, and we're looking at moves of 2 basis points on the 30-year, 1.7 basis points on the 10-year, and so the short end of the yield curve is rising now, whereas the long end of the yield curve is falling, and the amounts of the long end of the yield curve falling is higher the further out you go on the yield curve. And so that's the U.S. Treasuries today. Let's take a look at the dollar index. And we see this morning the dollar went up, but now the dollar is steadied and leveled off at 97.47 today. Thank you guys for listening to this market report. I know it's been a little bit of a short report. Give me a thumbs up, and we'll catch you guys in the very next show. Bye-bye.